Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to always win in the stock market. Yes, that's right. I'm going to show you a strategy I keep using over and over and over, and it has not failed me yet. I will give you a step-by-step walkthrough of how I find these option strategies and how I go ahead and execute them. Now, if you're new to options trading, or you're trying to use options trading in order for you to get some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be giving you a deep dive on one of my strategies I've been using in my portfolio forever, and it has not let me down as yet. So it has been tested and it has been proven. Now, what we're going to do, we're going to go ahead and get down and dirty with options today. And I'm going to show you, first of all, I'm going to show you two stocks that showed the same setup, and I'm going to show you how I use it in order to make maximum gains. Stay with me to the end of the video. I'm going to give you a bonus stock that you could use right now to implement this strategy that I'm using. Now, you guys know how we do it. Let's go ahead and get down and dirty. Now, the first stock for today is going to be United Health. Now, let's go right away into the advanced feature right here in order to open up the graph. We're going to go ahead to the 1 year mark right here. And there you have it. What I look for is stocks that have this huge decline right here. Now, whenever it has this huge decline here, this is not when I get into the stock. When the decline shows itself, I actually add the stock to my watch list and I just keep an eye on it. Now, whenever the stock goes down this much and I add it to my watch list, the next thing I do is go ahead and do my due diligence. Now, with the case of UNH or United Health, the CEO had a most unfortunate accident. Number one, the company has found itself in a lawsuit against fraud against the government. And most recently, Goldman Sachs has decided to sue this company. So this company has been getting a lot back to back to back. So after doing my own due diligence, I've decided after everything that's happening with United Healthcare fundamentals are still sound and is still one of the biggest healthcare providers in the US. So right away, I know that's a good company to trade. So I continue waiting, and then once the stock decides to go down, then I buy. Now I'm going to show you the point at which I buy. I'm going to buy right here. Now, when this is happening live, you don't see this chart and you don't see the other stuff the chart is doing. What you need to do is do your own thesis, and you need to trust your decision. So when the stock goes down here, I'm not buying. I'm waiting until it goes up here. Now, the reason why I buy here is I always wait until a stock that has a retraction. I always make sure it shows clear signs that it wants to move up before I get into the stock. Now, I'm going to show you what option strategy I use when I see these kind of setups. But before that, let's go ahead and get into another stock that I found the same setup on. And that's going to be none other than TTD, or the trade desk. Now, once again, you could see the same setup here with the trade desk. This stock had a huge drop right here. Once again, once it has this huge drop here, I decided to go ahead and do my own due diligence. Now, with Trade Desk, it's a bit different because I've been trading this stock since 2021. So I actually know about this stock. So once again, we don't buy here. We just put it to our radar and we wait. We do our own due diligence. Then the stock continues to decline. Once again, you do not buy right here. I went ahead and I bought right here. Once again, as you can see, this is the exact same picture perfect from the first stock that I just showed you. So I buy right here. Once again, you need to trust your thesis. If you see the stock shows clear signs that it's going up, you need to trust that, or else you're going to get scared. You're going to get out of the trade. Now, I will show you the strategy that I'm going to use, but let me show you what happened. Once I bought right here, the next couple of days, the stock continued to go down. But because I did my own due diligence, I trusted my thesis, I did not panic, I did nothing. So once the stock got to here at the $78 mark, I went ahead and I exited this contract. I exited this contract for, I think, a $1,800 gain in just a couple weeks. Now, if you guys want, you could go ahead and look for that video. I did make a video about that. So that is the setup I look for, and that setup is always going to make you win. Now, this is why you're always going to win. because you're trading a good stock, number one, and the stock has a drastic decline that has nothing to do with the stock fundamentals, the company's fundamentals are still intact, then that presents itself with an awesome opportunity for you to get in. Whenever you get in, you wait until the stock shows clear signs that it's going to go up before you buy. After you buy, you need to trust yourself. You need to leave it alone. Once you leave it alone, the stock is going to go up. Now, even if we have a bear market, this strategy is still going to work, and I'm going to show you once we go ahead and do the option strategy. Now, with these two stocks and this particular setup, this is the option strategy I would use. So let's go ahead to back to TTD, and we're going to go ahead and hit trade TTD options down here in order to open up the options chain. Now, with the options chain open, actually right before we get into that, just want you guys to know, if you guys need any help in order for you to start trading options or to get into income option strategies for consistent income, then I do offer one-on-one coaching. The link is going to be in the description below. Now, with the two stocks I showed you and the setup I showed you, this is the option strategy I would use. I would simply go to buy, I would go to call, then I would go ahead and choose my strike date. Now, the strike date I will be looking for, first of all, is going to be a strike date with 365 days or more to expiration. In this case, that's going to give me June 18th, 2026. The reason why I want a very far expiration date of 365 days or more is because I'm giving myself enough time for the trade to work in my favor. Like I just showed you, once I bought, the stock continued to go down, but I did not have to worry because I have a year until the trade expires. Now, of course, you do not need to wait a year until you close the trade. Once you hit your target profitability, feel free to exit the trade. So the strategy I'll be using is going to be the buy, the call, and then I'm going to choose a long call or a leaps option. Then I'm going to go ahead and choose my strike price. The strike price I'll be going for with this stock is going to be the $70 strike price. Now, if you're asking yourself why I went to the $70 strike price, let me just go back and I'm going to show you right now using the exact same chart right here. Let's go to the 1 year chart. Now, if you go right here, the current price here, you can see it's almost at a $70 mark. So let's go ahead. Let's get back into the options chain. Now, with this, let's go ahead and choose our expiration date once again. We're going to go back to the June 18th. 377 days to expiration. Now, I just showed you that the stock shows a very clear sign of support at the $70 mark. So if I were to do this right now, that would be my first level of consideration. However, I'm a very conservative investor. So in actuality, what I would do, I would go for the $65 strike price just to give myself some extra wiggle room. And that I'm going to have to pay $20.55, or in the real world, that's going to be $2,055. So now, with this option strategy, I'm able to control 100 shares of the stock for about $2,000. And now I have a year until this contract expires. Now I'm pretty much set up. Now, I did mention even in a bear market, this is going to work. The reason why it's going to work is because bear markets usually last for less than 12 months. So there's a very strong possibility that even in a bear market, this is going to work as well. So buy yourself enough time. Time is your most important criteria whenever you're trading options. Now, hopefully you guys learned something for this. And for those of you who stuck around, I did promise you I'm going to show you an extra bonus stock that can be used in order for you to do this strategy right now. By the way, this option strategy, if you're new to the channel, is known as the LEAPS option. LEAPS stands for long-term equity anticipation securities. Now, if you have one contract, it's going to be a LEAPS option. If you have multiple contracts, it's still going to be a LEAPS option. It's funny that way. Now, the stock that I would use right now is going to be none other than Google. Now, let me show you why. Once again, like I just showed you, I'm going to go into the graph right here. We're going to go to the 1 year chart and see what's going on with this company. And voila, another drop right here. Now, of course, I already brought this to my watch list and I already checked out the reason why the drop is here. Also, I did my due diligence, but even if you don't do your own due diligence, I mean, this is Google. If I need to explain Google to you, you really should not be trading options. So Google has a huge retraction right here. This would be a perfect opportunity for you to get into a leaps option on Google. Now, the reason why Google is right down here is because, once again, the fundamentals of the company is extremely strong. The company is in a couple lawsuits right now. They're trying to break up the company. Again, that has nothing to do with the fundamentals of the company, which is still intact. So if I were to do Google right now, I would pick up a leaps option on Google. The reason why I would not do Google is because it does not pay as much premiums as other stocks. So there you have it. That is the bonus stock I would be using. If I were to find this setup, I'd go ahead and do a leaps option on Google, and that should be as easy money that you have ever made. Now, if you guys have any question about the leaps option strategy and actually how to find these setups, then just let me know in the comments below. Now go ahead, like the video, subscribe to the channel, because I just showed you how to always win in the market. But most importantly, hit the notification bell to get an alert when I post a video. Now, we need to be kind to everyone. So if you see someone out there struggling to grow a small account portfolio, well, the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from the regular 9 to 5. And until the next video, keep pushing your investments.